You are tuned into the Ashraf God.
Right, let's talk about issues in the markets and how it impacts on you with Orin Tambo, Head of Investment Strategy at 274. Orin, good morning and good of you to talk to us once again. Thank you.
Good morning. Thanks for having me.
Thank you. Right, I'm looking at your Bears T-shirt. It's very clear that you look on the bright side of life, but that's not the case regarding homeowners and bad debts. Tell me about that.
No, it's not. So I actually came across this story, and one thing that a lot of market strategists have been sort of contemplating on trying to think about is what's going to be the impact of the hikes that we have seen from central banks, and they're very conscious of the fact that monetary policy always works with a lag, and that lag tends to be long and variable. And I think the report that we saw from South African banks is starting to kind of clarify in terms of the toll which the current economic environment is having on consumers. So essentially what banks have done, they've reported an increase in payments, showing that some of the the consumers who have taken loans from banks are starting to struggle to repay those loans, particularly some of the homeowners. And they've also increased the provisions for impairments. So what banks do is they have to sort of estimate the potential impairments on their books, and they have to put it in the financial statements before they happen. So I think some of the numbers that they were quite very significant, very dramatic increases. So, for instance, if you look at Capitec, it has increased its provisions by more than 80% from the previous reporting period. ABSA as well has increased by 61%. So if you think about those two banks, they tend to play quite often into what you refer to as a low quality sort of segments of the market. So low income earners, middle income earners, and then Nedbank as well, and FirstRand and Standard Bank have also increased their provisions by between 13% and 22%. So that is essentially the picture, which is not very great, but it's understandable. We have got a period of very high inflation that we've seen. And it's unfortunate that during that sort of period whereby inflation is very high, the central banks have to come in and do something to try and control that inflation. So what they do is they increase.
By the way, in terms of increasing their provisions, do those same banks also increase their support for consumers who are battling to pay? That means effectively providing them an umbrella of compassion to say, we will support you more than we've supported you ever before, because we understand the plight, the predicament in a greater sense of a very damaged South African economy.
Yeah. So I think so probably a very good example is Capitec. So what Capitec usually do is that it provide the restructuring of loans, so they roll over some of the loans. But quite often, as much as it might come across as some sort of support measure to consumers, it might actually come at a cost, because when you roll over a loan that you have with the bank, it also comes with some additional administrative costs. But generally, we're seeing some of the banks also providing grace periods, because at the end of the day, I think what the banks have to do is and understand is that this is very cyclical. You're going to go through a period where borrowers are going to struggle to pay. But usually that passes, and you're going to have a period where things are going to get better. And so they have to sort of manage during that particular period and try to push through some of the borrowers so that you can get to the other side of the economy.
Absolutely. Right. Let's talk about developments regarding Chinese investment curbs.
Yeah, so it's quite I think a concerning article as well. If you invested in global markets, so what you've seen over the past decades is an increase in tensions between the U.S. and China. And we're starting, initially, the tensions was pretty much within the political space. So it has never really gone to military confrontation, but it was predominantly within the political space. And what we've seen, though, over the past few years is that it has gone to a new phase where it has become more of an economic sort of tensions between the two. And this particular article, do show that things are not getting better between those two largest economies. Essentially, what the US is trying to do is that it's going to, President Biden is reported that is going to sign an executive order that is going to curb certain investments into China. They are focusing and targeting particularly on American technology. Some of the industries they've mentioned here is that they're probably going to disallow American companies from investing in semiconductors in China and also exporting any semiconductors to China. They're also going to sort of put caps in terms of artificial intelligence and quantum technologies. So within that particular space, and I think the thinking from the US is that they're doing it on security grounds, in the sense that they believe that China has been spying on the US, and they also believe that China has been stealing some of their intellectual property. So they're saying to American businesses, you don't have to invest in China on these particular issues.
Okay.
So I mean,
we
just
call it, yeah.
yes. Yeah, I
call
think
it global economic wars. Absolutely. All right. Anything else you want to say?
No, I just wanted to say, I mean, looking at the potential, what it means in the bigger scheme of things, it means that we might actually see the decoupling between the US and China, which is going to be very disastrous for the rest of the world. Number one, we're talking about two, largest economies in the world, and secondly, we're talking about the two biggest economies when it comes to supply chains, when it comes to productions. China has become the home for global production, and if we start seeing this kind of tension, or the route that has been taken by the US, becoming even more intense, that could have massive implications on the global economy.
Okay, that's where we're going to leave it. Appreciate your time, Orin. Thanks as always. I was going to say we'll talk again on Monday, but I think that's not the case because, I mean, this feature comes to an end today, I think. So it's been great connecting with you and your colleagues all throughout the month of Ramadan.
Thank you.
Perfect. And it's been fascinating with that collaboration with 274. Do follow them. Just Google them on the website. You'll see all that they do. Still to come, we'll talk about that Muslima on call driven Eid day coming together in Johannesburg on the day of Eid. And we'll also cross to Aisha Kaji in the Al Aqsa Watch feature. And later on, we'll speak to Maulana Ibrahim Baum, around the numbers around the moon sightings later this evening.